Bismillahirrahmanirrahim. Assalamualaikum warahmatullahi wabarakatuh. Okay, today we will do the topic of understanding cash flow statement. All right. Let's start the section with Al-Fatihah. Bismillahirrahmanirrahim. Okay, Amin Rabbal Alamin. Let me go through the subject, the topic. So this topic is about understanding cash flow statement. So I hope you remember what is cash flow statement, Let me show you what is cash flow statement because before we go through the topic, if not, like confused what is all about. Let me get the file. Let me get the material. Hold on. Okay, this is the annual report that I showed you in the beginning of the program. So you remember? Can you see Nestle? Nestle, good food, good life, right? So this is the annual report. So just want to refresh what we shared the first day of the class. This is the corporate governance and financial report. So here you will see the report of the company, yes, and then I will show you which one is the cash flow statement, right? Okay, so let us see. So this is the, again, this is like refresh on what is annual report. So this is annual report of Nestle Group. Nestle, as you know, it is a company that produce all the food item like what we have at our home. So we have this instant noodle, we have Milo, we have Nescafe, we have all the sauces, for example, tomato sauce, chili sauce. So all the products are available throughout the world. Okay, so this is it is available in Malaysia. So it has a manufacturing plant in Malaysia. So it is listed on Bursa Malaysia as well. Bursa Malaysia is the BORS, it is the stock market exchange of Malaysia, Bursa Malaysia. So Nestle is one of the biggest company listed on Bursa Malaysia. So the requirement for those companies listed on Bursa Malaysia is for them to submit annual report. So this annual report is as at 2020. Annual report have a lot of segment. For example, this one is the corporate governance and financial report. Of course, they have the corporate social responsibility, and now with the requirement of many companies, many countries in the world, they want the company to report on the ESG, for example, environment, social, and ESG, governance, environment, social, and governance. So they want to see all those information being reported in the annual report as well. So that's why usually financial statement is very thick. So for this one, only the corporate governance and financial report have 144 pages. Okay, so this is for Nestle, right? This is the chairman. So all the companies usually being governed by the board of director. Board director are the one who appointed by the shareholders to represent the shareholders on the company. So for example, this particular guy, this is actually, his name is, he's a very, usually board director are very senior industry expert. So like this guy, he is the chairman of Nestle. So chairman, of course, is the leader of the board of director. So board director, they will have meeting like once a month to give approval, to give their input on the operations of the company. So for example, the new products that company want to offer, so the board director will have to go through on the viability of the product, and then they will give approval or endorsement. Yeah, so this guy is the chairman. So usually, in order to understand the performance of company, you have to read, yeah, what being mentioned by the chairman, for example, so that you understand what being faced by the company in their operations. Okay, so this is about corporate governance. So let me go straight to the financial report. So this is another board of director who so he is in the audit committee department. So what does it mean here is board of director, they have to hold another position in the company, for example, in the audit committee. So audit committee in specific, of course, they have to go through all the financial statement to ensure that the financial statement are presenting all the true and fair view of the companies. Okay, and all right, let me show you. Okay, this is the statement of risk management and internal control. So this particular group, this particular committee will go through the risk management of the company, all the internal control imposed in the company, and then they will report in the annual report as well to ensure that the company is not conducting the operation in a risky situation. Okay, so and then the next one, okay, this is the key highlights of the performance of the company. This is in terms of revenue. If you remember the word revenue, it's actually about how much the income of the company, yeah, how much income. So it can come from various segment of business. For example, Nestle itself, they have, they sell food, they sell beverages, yeah, they sell also all the ingredients for cooking, for example, the sauce, the ketchup, and all that. So the various segments. So this revenue representing the sale of their, the main item, the main business, yeah, the turnover or the revenue from the main business of the company. Then this is about profit before tax, and then this is about net profit, earning per share, and net dividend per share. So this is actually the main important point from the financial statement being highlighted here. That's why it is known as key highlights. This is to inform the user of financial statement on the performance of the company in short. Right? Okay, what about this one, share performance? What does it mean by share performance? Share performance is the performance of the price of the share on the stock exchange. Yeah, for example, you can see here, the price of Nestle for the 5 years period from the year 2016 to the year 2020. The price is moving from 81 ringgit to 147 ringgit. So it's very expensive actually per unit of share. Yeah, per unit of share. So if we want to buy, let's say 100 unit of share, of course we have to multiply with 100. So it's very expensive because of the quality of the company. Yeah, it's very expensive. So what does it mean by the lowest? So lowest means, so in the year, the lowest price for Nestle is 133. So compared to 5 years ago, the lowest is 73. So you just imagine whoever bought the share in the year 2016. So now the price is already 147. So they make a lot of profit from buying the share of Nestle. And of course, apart from, so this is actually being known as capital gain. When we buy shares, so when the price increase in shares, so we are gaining a capital gain, so profit from the capital gain. Okay, so if the price, let's say from 81 ringgit bought into let's say the price went down to 50 ringgit, so it is a capital loss. Yes, so it is one potential situation where we invest in shares. So for good company like Nestle, so the investors are enjoying the profit. So that's why it is also reported in the financial report to tell that this company is a good company. Okay, so this is the up and down of the price throughout the 5 years period from the year 2015 to the year 2020. The move up and down of.
Doctor, like to buy a share, what can someone do?
Okay, if you are in Malaysia, you want to invest in stock market to buy shares of company, you need to open an account with an investment bank. The account is the name of the account is CDS account. CDS stand for Central Depository System, yeah, so CDS account. So it is like you are opening account at the bank as well, yeah. So for example, you have account with Bank Islam Malaysia, you have account with Bank Muamalat. So if you want to trade stock on stock exchange, you have to open a CDS account with an investment bank. Yeah, so there was a student of this class as well. When I told him about this, so he's from Morocco. He immediately opened an account here and he trade. And then the good thing is now it is available online as well. So you can go through maybe Rakuten Trade. Rakuten, the name of the stockbroking, it is actually okay. Not only investment bank, you can also go to the stockbroking house or share trading company to trade. One of the company is available online. It is known as Rakuten. Rakuten, right? Rakuten Trade allow you to open online account and it allow you to trade on stock market. So usually young people, they prefer to trade on Rakuten because it's available online. Yeah, it's very investor friendly. Okay, you can try explore on Rakuten Trade. Okay. So, but of course, you have to put money first before you can start investing. They want to see at least you put 1,000, then you can start purchasing share already. Yeah, but please be careful because stock market is very volatile. It can make people suffer from the losing of money. So be careful when you trade stocks on Bursa Malaysia and all stock market in the world as well. Okay. All right, so this is another highlights of the financial report. Yeah, so this is the main key point that is being picked from the financial report. Okay, let us go straight to the, yeah, this is another highlight, the 5-year statistic on the performance of company. So if you see, so as a manager of the, bank or manager of Takaful, so this is the thing that you should be able to do, yeah. You can just flip through the annual report, then by seeing this 5-year statistic, you will already understand what happened to this company. For example, when you look at Nestle, you can see how the turnover or the revenue have been increasing from 5.06 to 5.2. This is actually billion, because it has already the 30 here up there. So this is not million, this is actually billion, 5 billion ringgit of revenue in the year 2016. 2017, it increased to 5.26, and then to 2018 increased further to 5.5 million. Yeah, and then however in the year 2019 it decreased a bit, not so much, but decreased a bit. Decrease means a bit means, from 5.519 to 5.518. So not much actually being affected by, of course, everybody know it's about COVID-19. Yeah? Because of COVID-19, it affect the performance of Nestle, but it is only a small, decrease in the revenue. So the same happened in the year 2020, it down further to 5.4. So of course, when the sale decrease, the rest also affected. For example, in terms of profit before tax, it's also decreased, yeah, from 8.875 million to 724 million, right? Okay, so this is the 5-year statistic. So as a manager in the future, when you become a manager, by looking at the 5-year statistic, you already can say something about the performance really. Now you can say, okay, Nestle, even though it is a big company, is also being affected by COVID-19, but the performance is not that much. Yeah, it is only a bit of decline in the revenue. So that's what you can say already by looking at the 5-year statistic. But of course, if you want to know more, you have to look at the details. Yeah, the details are reported here. Okay. Okay, let us go to the details of, all right. So this is the statement. This is the first statement. Yeah, this is the first financial statement, which is known as statement of financial position, or another name for it is balance sheet. Yes, so why the name is balance sheet? Anybody remember what I mentioned last week? Why it is, yeah, say again, Mahmud. Why it is known as a balance sheet? Or Munira, do you remember?
Yes, but it is because the amount of asset must be equal to the amount of liability and
Yes, correct, Munira. The amount of asset always equal to the amount of liability plus equity. So the asset will always balance to the liability plus equity. So that's why it is known as balance sheet. Yeah, and then it is also known as statement of financial position because it is showing the financial position of the company, right? Financial position in the form of how much asset the company have, how much liability the company have, and how much equity the company have. So the financial position as at 31st December 2020. So usually it is presented as at. So it is like a screenshot of the financial position of that company at this point of time. So as mentioned by Munira, asset will always equal to liability plus equity. So you can see here, yeah, asset, it is categorized into two types, non-current asset and current asset. So non-current asset, of course, is something that is having the lifespan of more than 1 year, while current asset is for asset which is less than 1 year, right? And for example, inventories are the things that we buy so that we can sell. The company buy and then the company can sell. So usually they want to sell the inventories within 1 year, right? And then the trade receivables. Trade receivable means the customer who buy on credit. So definitely the company, when they have customer who buy on credit, so which means that they are the amount of, you know, the amount to be received. So the amount that being sold to the customer is not yet received in cash, even though the item being sold. Yeah, so that's why the amount be recorded as trade receivable. So something to be received. So definitely this is the category of amount that they want to be received in 1 year. Okay. All right, and then current tax assets, and then cash and bank balance. All those things are considered the asset that have a lifespan that less than 1 year. Yes, so and then the rest of here, non-current is the one that having the lifespan more than 1 year. So if you see the category of asset, this is trade and other receivable. Again, yeah, it appear in the non-current asset, even though it's already appear here, current asset. So the reason is because of they are receivables that take more than 1 year. Okay, they are asset that is taking more than 1 year to collect the money from the customer. And then the rest are definitely, of course, something that is, you know, in the category of fixed asset. For example, property, plant, and equipment. Yeah, and then right of use asset is something that is on lease, something that is being rented. Okay, and then intangible asset, you know that it is something like trademarks, copyright is something intangible, but it is an asset of the company, or even brand name like Milo and Nescafe. And then these are all the investment that the company have in subsidiary and associate. So so usually company that go for listing is the big company who have investment under, you know, they have like, you know, like a father having children. So the subsidiary and associate are the children of the parent. The parent is Nestle Group, and then the subsidiary and associate are the Nestle Manufacturing, Nestle Asia, all those the company below the parent, you know, the subsidiary and associate. Okay, so this is asset. So if you see the total asset, the total is 2.8. So what Munira mentioned is this total will always equal to the total of equity, which is 557, plus the total of liability, which is 2.3. So the total equity and liability is 2.8 as well. So it is similar to the total asset. So that's what it meant by balance sheet. The total of asset always equal to total of liability plus equity. Okay, so this is about the statement of financial position. Second statement is statement of comprehensive income. This is the statement showing all the income earned by the company. This is the revenue is the one coming from the main activities. For example, for Nestle, it is coming from the sale of food and beverages product. Yeah, other income, usually income that is coming from maybe something like the forex trading, because the company, when they evolve export and import, usually they will have forex trading as well. They will trade currency as well as a mitigation, risk mitigation, as a hedging, to make sure that they won't be losing from the activities of exporting and importing because of due to the volatility in the currency. So all those income is reported as other income. So some years they don't have, and some years they have. For example, in the 2019 they have other income, but in the year 2020 they don't have other income. All right, and then these are all the other items I am selling, all the expenditure. And then after that, this is about the finance cost and finance income. Finance cost is the interest cost that company incur when they have loans with the financial institution. Finance income is the income where they get it where they put the money in the bank, they will get the interest income. So of course, when they put the money in the Islamic bank, they will get the profit. Yeah, so this is also the amount of profit from Islamic banking deposit that the company put their money in. Yeah. So usually when I mentioned to again now, when we want to evaluate whether the company is Sharia compliant or not, so this is one of the criteria that we will be looking into, whether the income from interest is actually from is significant or not. The amount is 33% than the asset or not. And then it's coming from the investment Islamic banking or commercial banking. So those are the significance of this particular information. Okay, so from the statement of financial comprehensive income, what we want to see is, okay, the amount of revenue, and then minus all the amount of expenditure. And then after that, what we get is profit before tax. Profit before tax is the profit that the company derive before paying tax. And then after they calculate how much the tax, they will now report the profit net after tax. And net of tax meaning that the profit after they pay tax. And then they will add some other income and expenditure. For example, this is in terms of cash flow hedges. So what does it mean is it is hedging the cash from the activity of hedging money. And then this is from their liability when they remeasure the liability. And then this is other comprehensive expenditure. So if you want to know the detail, you have to look at the notes. All the number here is actually referring to the notes to the account. So it will be reporting the details of all these particular figure. For example, on income tax, you want to know the detail, you have to look at note 22. Okay. So finally, from this particular statement of comprehensive income, what you get is the total comprehensive income for that particular year, which is 1,548 million. And then after that, from the income, what they will report here is total income divided by number of share. Yeah, this is known as earning per share. Earning per share is one of the ratio where usually company do to show the investor how much the income per share. So let's say if we are holding 1,000 units of share, so now we know that our income would be 236 sen multiplied with 1,000 units. So meaning that we are capable of getting, this is the income generated by the company on every single share. Yeah, so this 236 sen means that For every 1 unit of share, the company managed to make a profit of 236 sen. So it is a good, actually good earnings for a company. Okay, so this is reported in the financial statement of comprehensive income. Okay, the third statement is statement of changes in equity. So as a refresh for those already went through the topic 1 that day, yeah. So this statement of changes of equity is showing what is the amount of equity at the beginning of the period, 1st January 2020, and then what happened to the cash flow hedging activities, and then all the remeasurement of the liability, and then profit for that year, and then after that how much dividend been declared to the shareholders, and then after that they report how much equity at the end of the year. So a statement of changes in equity, it is showing how much changes in the amount of equity. Okay, how this is linked to the earlier statement, right? So let us have a focus on this one, yeah. Total equity in the beginning of 2020, 664. And then at the end it is reported at the end 557. Okay, so let us I want to show you how it is linked to the previous earlier statement. So this is equity, changes in equity. So you have to look at the equity portion of the statement of financial position. Okay, statement of financial position. So the first statement that we look at, so this is statement of financial position. Okay, statement of financial position. So let us look at the equity segment. So this is the equity segment. Equity attributable to owner of the parent. So the total 557. Yeah, 557 is the total at the end of the 2020. At the end of 2020. So all right, so so this is what being reported in the statement of changes in equity. It is showing how the 557 is being derived. Okay, so supposedly this is the beginning of the period, because this is the equity at the end of 2019. Yeah, so this is the year 2019. So what is reported here is supposed to be at the beginning of period for 2020, 664. Yeah, so let us go back again to the statement of changes in equity. Okay, so 664 is the beginning. Yeah, 664 is the beginning, which is what you saw in the which is reported in the year 2019. Yeah, so the amount reported at the end of 2019 will be the amount at the beginning of 2020. And 664 924, and then at the end, so the amount become 557 136. Yeah, so this is due to the all the items here. Yeah, so the loss in the cash flow hedging, and then the reduction of the benefit liability and other comprehensive expenditure. Yeah, so and also the dividend declared throughout the year. This is the dividend being declared and paid to the shareholders. So that make the amount of equity reduce in the year 2020. Okay, reduce. So reduce from 664 to 557. Okay, so that is changes in equity, statement of changes in equity. So this is the one that we will be covering today, statement of cash flow. Okay, give me 1 minute break, yeah. Hold on. Okay, let me continue. Okay, so this is actually the statement that we will learn today, statement of cash flow. So as the name implies, this is about the movement of cash in the company. Yeah, cash flow is the movement of cash in the company, where the money come from to where the company goes out. Yeah. So if you look at the cash statement of cash flow, what you can see here, yeah, so this is the subtopic of it. Yeah, so this is the statement of cash flow for the year ended 31st December 2020, and then the subtopic is cash flow from operating activities. So it is actually showing the movement of cash in for the items that is related to the operation of the company. So operations means in terms of the sales, in terms of the production of food and beverages, in terms of the sales activities, you know, so all those related to the operation. So and then the second segment is about so and then after it calculate all the items, and it is reporting what is the operating cash flow, operating cash flow before changes in working capital. So meaning that the amount of cash flow from operating. Okay, this is the cash flow, net cash flow generated from operating activities, right? So it is just reporting what happened to the cash in relation to the operational aspect of the company. And then the second segment is cash flow from investing activities. So this will be about, okay, if you look at the activities, it will be about acquisition of property, plant and equipment. For example, when the company buy new property, when the company buy new factory or plant, when the company buy new machinery, for example, all those will be included here, right? And then, so that's why it is reported as in bracket, because this is the money flow out, meaning that the money which is being used to buy property, to buy plant, to buy equipment. So that's why it is reported in bracket, right? To reflect that the money going out to buy all these items. So we have to look at note 4 to see the details where the money goes actually to buy either property, plant or equipment. And then after that, dividend is considered something related to investment, right? Dividend received from associate. So dividend from associate, meaning that the company that is invested by Nestle pay dividend to Nestle, right? Nestle is the parent company. It invests, it put money in associate company. Associate company is where, associate company is where Nestle have investment, a portion of investment, which is from 20% to 49%. So when a parent company like Nestle, when they have a share which is from 20% to 49%, it is known as associate. So based on the investment put by Nestle, this associate company will pay dividend, right? So this is the amount of dividend paid by its associate company. So it is an income. So that's why it is reported as, you know, positive. It is an income. All right, and then this is the finance income received. So this is actually the profit from the bank, profit from the money that that Nestle put in the bank. So again, it is a positive because it is an income to the company. And then net proceed from divestment. So what does it mean is net proceed or net revenue from the sale of any asset. Yeah, something related to this, whether they sell property, whether they sell plant, or whether they sell equipment, or whether they sell the investment. So this will be reported here. Net proceed means the net income after they deduct all the expenditure required to related to the divestment of that particular asset. Divestment means sale, right? So this is income. And then after that, proceed from disposal of property, plant and equipment. Okay, divestment is specifically for investment. You know, when they sell investment, they call it divestment. So if they sell property or plant equipment, it will be reported here. Disposal of property, plant and equipment. So as you can see here in 2019, it is 2.5 million, 2.3 million. In the year 2020, only 463 amount of property, plant and equipment being disposed, right? So from here, you know that negative. So meaning that in terms of investing, the net is negative. So meaning that the company use money to invest more than what they get from in terms of investment. So they use the money go out more than the money coming in terms of investment activities, right? And then the next one is financing activities. So if you look at the item in financing activities, it is about the dividend paid. The dividend paid by the company to the investor. So definitely it has to be like, you know, if a good company like Nestle, usually every year they will pay dividend. So paying dividend definitely is a money going out. So that's why it is reflected as in bracket. It is a negative. So money going out. So if you see this in the year 2019, the same amount being paid. So it is like Nestle is putting it as, you know, a policy that every year they will fork out the same amount of money to pay dividend to their shareholder. Okay, so it's a good amount. 656 million is used to pay dividend to the shareholders every year. So the same amount for the 2 years period. And then this is the finance cost paid. Yeah, the finance cost incurred with the loans that they take from the banks. So this is the finance cost or the interest cost, or if they take the financing from Islamic, of course it is the financing cost. You hold on, eh? Okay, so you already see that, okay, dividend paid, and okay, this one is about the interest, yeah, interest cost associated to the loan which they take from the conventional bank. If the financing that they take from Islamic, definitely finance cost represent the you know, whatever cost, of course lah, if it is murabahah, if it is ijarah, it is about rental, right? If it is a murabahah, it's about selling price. So all these are reported as the finance cost. So and then because of it is money going out to pay the bank, so that's why it is reported as negative. And then payment of lease liability. Lease liability is about, you know, whatever the amount of lease, amount of rent item being on rental, and then they need to pay the lease, right? So this is money going out as well. And then proceed from borrowing. So what does it mean here? Proceed from borrowing. Okay, when the company take new loan from the bank, or they take new financing from Islamic bank, for example, the amount that being given by the bank to them will be reported here as positive. So meaning that they get money from the bank. Okay, so it is positive. So meaning so the amount is 105 million in the year 2020. So the net cash from financing activities, so if you see here, it is negative because of more money going out to pay dividend, to pay the interest to the bank, and then also to pay the rental or lease liability. Okay, so what money going in, the amount of money going in is only 105 million, while the amount of money going out is more than 715. That's why the net is negative 615, meaning that money going out more on financing activity, right? So then finally, it will be total up all the cash and cash equivalent at the end of the year. Okay, let us go back to the cash flow from operating to see what are the figures being reported there, right? Feel free to ask question. Don't just get silence and then I'm afraid that you will be confused. Yeah. So all right. So this is the cash flow from operating activities. How it is reported. Yeah. It is started with the profit before tax. So if you look at the profit before tax, it is profit before tax is the item that we finally get for the statement of comprehensive income. Okay, let us go to the statement of comprehensive income to see where 724 is reported. Okay, this is profit before tax. 724, all right, statement of comprehensive income. It is about profit before tax. Yeah, this is the statement of comprehensive income. And then it is the profit before tax, 724. So this is the amount. 724,769. So this is the amount being the starting point of statement of cash flow, right? So this is actually related to my question to you earlier when we learned about the item in the statement of financial position. One of the questions that I asked is whether the amount reported in the statement, the amount profit is actually similar to the cash or the cash available in the bank or not. Remember or not that question? Whether the profit reported here is similar to the amount of cash available in the bank or not. Yes, so I remember Munirah maybe answer that it is not similar because of profit actually consists of all the item that may be not involving cash. The reason is because of in the in calculating the profit to know about the profit, what we calculate is including those which is on credit. For example, the revenue is including, some sales are made of cash, and as most significant portion of sales usually are based on credit, which is actually not the company do not get cash yet, but sales is already being recorded here, but the money is not being received yet, and the money is being recorded as receivable. Remember, so and then even the other income, it is not necessarily is obtained in cash. Sometimes it is still on credit. And then all the expenditure as well, sales and distribution expenditure. It is not actually necessarily means when we spend the money for companies, yeah, when we record that particular item as expenditure, doesn't mean that cash go out. Maybe the company do not pay yet, they do not pay yet the sales agent. Maybe they do not pay yet their the media that they use for the advertisement, right? You can see the advertisement of Nestle product on TV, even on internet. You can see all the advertisement. So maybe when the advertisement already being aired in that particular year, but the money is not paid yet to the company. So those are also this particular amount maybe not really about the cash going out, because maybe it is still on credit. All those other items as well, all involve not cash 100%. Usually it will involve some credit transaction. So that's why the amount reported here, profit before tax, is not about the money available in the bank. It is just the profit being reported based on all the transaction which involve cash and also credit. Okay, so that's why we need to prepare the statement of cash flow to understand how much the money available in the bank. All right. So if you notice, yeah, the cash actually the cash position is reported in the statement of financial position. Okay, let us go to the statement of financial position. So this is the statement of financial position. So all the money cash is reported here actually. How much the cash amount, right? So this is the asset. Okay, this is the asset. Cash and bank balances. 9 million, right? And then they also have like, you know, investment in subsidy. All those actually something to do with the amount of money they have. But of course, this is invested, but this is the cash and bank balance, 9 million. Okay, let us see whether this is the final one that will be reported in the cash, because this is what available in the bank, in the bank of Nestle, in the bank of Nestle. They have 9 million in cash. So let us see whether the cash flow statement finally reporting about this money, you know, 9 million. Okay, so of course we already know that it started with the profit before tax. Yeah, with the profit before tax 724 just now. Yeah, so let us go to the statement of cash flow to see whether the 9 million of cash is the final outcome of the report. Okay, so this is statement of cash flow. It started with the profit before tax. Yeah, so now operation wise, because I already went through with you the you know, cash flow from investment, cash flow and from financing activities. So but this one I just you know, mentioned to you about, this is the first segment, but I didn't go through with you the component of operating activities. Okay, so now from the profit before tax, what being done here, what being presented here is the adjustment for property, plant and equipment. What does it mean here? Whatever the financial figure which is not really involving the you know, the in and out of cash will be adjusted here. So what does it mean here? Okay, depreciation in the statement of comprehensive income, it is deducted. Yeah, it is deducted from the revenue. It is depreciation is recorded as expenditure in the statement of comprehensive income. However, it is not actually about money going out, because depreciation is just about the portion of usage or the portion of the assets being utilized. The portion of assets being utilized, 140464, yeah. But it is actually not about money going out, but it is deducted from the revenue. So that's why now it is added back. It is added back, yeah. It is added back in the calculation. And then the same goes to loss or gain on disposal. So in the statement of comprehensive income, this amount is deducted, but now it is added back to show that it is not actually about money going out when we deduct it from the, even though it is deducted from the revenue, but it is actually not money going out. It is just the, you know, the record that, okay, when we sell the item, we are losing the amount of 322,000, but it is not actually money going out. The same goes to impairment loss. Yeah, impairment loss is the reduction of value of investment. Yeah, so where we record in the statement of comprehensive income as well as an expenditure. However, it is not actually about money going out from the company. So that's why it is added back to the profit before tax. And then written off means the asset, which is the property, plant and equipment, which is being written off. The amount is 1.5 million. When we write off an asset, so we will deduct it from the revenue as expenditure. However, again, it is not actually money going out from the company. That's why it is added back to the profit. Okay, the next one, depreciation of right of use of asset. Yeah, again, this is actually in the the statement of comprehensive income. This amount is deducted as expenditure, but again, it is not actually about money going out. It's not actually involving a cash which is going out from the company. That's why it is added back as an adjustment. Yeah, it is adjusted here. Okay, and then about intangible asset, similar to the physical asset, intangible asset also have depreciation, which is known as amortization. Yeah, amortization is meaning the utilization of intangible asset. For example, brand name when the company register for brand name, let's say it is for 10 years period. So when it is utilized for 1 year, of course, from the amount being paid for the brand name, the 1 year portion of the fee will be reported as amortization. So something that being utilized already. Again, it is not actually about money going out. It is just to recognize that from the amount that we pay for the brand name, for example, now this money, this portion is being utilized for the first year, for example. Okay, so it is not about money going out again. All right, so okay, the next one, expenses related to defined benefit plans. Yeah, so again, this is not about money going out, but it is deducted from the comprehensive income as expenditure, so that's why it is added back. Okay, finance costs and finance income. Okay, so in the statement of a comprehensive income, it is calculated outside the profit after the it is recorded as expenditure and also income. So now it is the cost is being added back, the income is being deducted. So because of what being calculated is not supposedly what being paid actually, because this is so they have to deduct what being paid in cash. Next one is write down of slow moving inventories. So if inventory is the stock that they have in the go down, right? If the inventory is so slow moving, and sometimes they will write off because of they say that it is already obsolete, right? So but and then the amount that they written off will be recorded as again expenditure. Okay, as expenditure. So so when they want to prepare this cash flow statement, they will add back the amount, because of this is not actually about money going out again, and they just write off the amount to reflect that okay, this item cannot be sold because it's already obsolete, right? Okay, so they will add back. Yeah, however, this is in negative, which means it is actually the reversal of the write down of slow moving asset. So what does it mean here? Before this, the inventory already being written down. However, now it is reported as it is being able to be sold. Inventory that is considered as obsolete, it is now being sold. Yeah, so that's why it is reported as reversal. Now it is and then it is added back in the comprehensive income. So that's why now it is deducted. When it is in bracket, meaning that it should be deducted from the profit before tax up here. Yeah, from here it should be deducted. And then net unrealized foreign exchange differences. So this is actually when it is a negative. So now it is taken out. Yeah, well, initially it is recorded as positive in the statement of comprehensive income. So now it is being reported, it is taken out because it's not really involving the cash. Share-based payment expense. Yeah, share-based payment expense. So this is actually about the expenditure related to the issuance of share. So initially it is recorded as expenditure, but now it is added back. Yeah, again it is not involving the movement of cash. And then share of profit of associate company. So initially in the statement of comprehensive income, it is added, but it is not actually involving cash. It is just to recognize that part of the profit owned by reported by the associate is actually belong to the company, but it is not actually involving the cash. So that's why it is taken out or adjusted, being deducted from cash flow. Okay, so let me go to the statement of comprehensive income to see this particular information. Yeah, 697 for share of profit of equity accounted associate company. Okay, so let us go to statement of comprehensive income. Okay, yeah. So this is statement of comprehensive income. So it is actually reported after profit before tax. So it is here, yeah, this one. Profit attributable. Okay, hold on. It should be profit attributable by associate company. You hold on. Yeah, it is not actually available here, but it should be in one of the in one of the in one of the in one of the notes. Yeah, in the notes it should be reported the amount. Okay, this one. All right, this one here. Share of profit of equity accounted associate. The amount is 697. It is added, right? It is added. It is a positive, meaning that to come to get the profit, net profit, they will add the profit of an equity accounted associate. However, that's why in the cash flow statement, they have to deduct the amount because it is actually not involving the cash not coming into the company on that particular item. Yeah, so the proceed, this one, in terms of operating, this one, yeah, this one, the share of profit of equity accounted associate 697 is taken out or is adjusted from the profit before tax. And then trade receivable, net reversal on impairment loss. So previously, it is the loss is being reported as negative. So when the net reversal and then it is included back in the income. That's however, since it is not involving cash, that's why it is taken out at the cash flow statement. And then the item, the trade receivable written off. So, so previously in the statement of comprehensive income, when trade receivable is written off, and then it will be deducted as expenditure. So, however, it is not really involving cash. That's why it is adjusted here as an addition to the profit before tax. So we have to add back the amount because it is not actually involving money going out. So now this is all the operating cash flow before changes in working capital. Okay, so all the in and out of the adjustment that we make on the item not involving cash. So this is the amount not involving cash. So now we will see what is the working capital condition. Working capital is about all the asset, the current asset minus current liability. So now it is reported that in terms of inventory, it is now inventory reduced by 43,344. This is actually the difference of inventory in the beginning of the year and end of the year. So what does it mean here is money going out to buy inventory. Money going out to buy inventory, the amount is 43,344. This is reported in the cash statement of financial position for the inventory. So the same goes here, trade and other payables. We in the statement of financial position, it is reported the the 2-year position. So this is actually the difference from the last year from this year compared to this year. So it is a positive, which means that it is meaning that the amount is when it is positive, so money coming in, so money coming into the company. So meaning that there is actually an amount given to the company, paid to the company. When for the receivable is the money supposed to be going in. So when it is a positive, means that the receivable reduced, which means that the trade creditors, the trade debtors, the customer who buy on credit now pay they pay to the company, and then the net pay is 36 million. Yeah, so these are how the changes in working capital. So the amount now the cash flow used in operation is 1.09, and then after that they deduct the retirement benefit which is paid to the staff who retire, and then also they pay the income tax. So this is the income tax amount, is the amount that is actually paid by the company. So 174,971. So now the net cash from operating activities is 909. Okay. So all this net cash from operating activities will be added with the net cash from the investment activities. This one, investment, and then with the net cash from the financing activities, and then this is what we get at the end. Yeah, at the end of the year, this is the cash and cash equivalent at the end of the year. So, all right, so this is the amount reported here. Okay, any question on the cash flow statement? It's a bit of, of course, difficult to understand because of it is involving, the item which reported in the previous statement. So this, so that's why statement of cash flow is actually the statement that connecting the amount which is reported in the statement of comprehensive income, which is the profit before tax, with the amount reported in the statement of financial position, which is the cash amount. So it is like showing the user that, how you want to understand how much actually the cash available in the company's cover, in the company's bank, how much it is actually available. So from the profit, so we adjust the profit, and then we look at the whatever amount related to the cash movement only, and then after that we will get the amount available at the end of the year, right? Okay, any question? A bit difficult to understand, right, Munira?
Yes, Doctor. Madam.
So this, is it okay, Munira, so far?
Why is the total cash equivalent at the year is negative?
Okay. It is actually showing actually from the three categories of activity, the operation, the investment activity, and also the financing activity. From the three activity done by the company, money going out more than money coming in. So they use more money to do the operation, they use more money to do the investment, and then they use more money to do the financing activities. So I mean, so the net from the activities is actually money going out from the business more than money coming in. Yeah, if you note here, so money coming in, for example, finance income received. Yeah, but actually, in terms of investing activity, money going out more than money coming in. So here you can see that money going out in terms of investment activity is negative 290, meaning that money going out more than money coming in. So in total for Nestle, the money going out more by 28 million compared to money coming in from the activity. So it is not actually bad, yeah. Still the company reported a profit, yeah. The company is still making profit. However, in terms of cash, they use a lot cash out. They use cash to pay all the expenditure, all the they pay to the creditors, they pay to the bank. So they use money to pay more than they receive money for that particular year. So it is not actually bad when you see the cash equivalent as negative. Actually, it is, but of course, the company have to be, not so much negative in the cash flow, because it will be like, not being efficient in managing of cash if the cash is so much, going out than coming in. It is quite risky as well, yeah. But looking at Nestle, the position is good, and never that Nestle have a problem to pay all the creditors, to pay all the investors and all that. Okay, but still it is like, you know, something that need to be focused by the management as well, because it's supposed not to be reported as negative at the end. Yeah, supposedly, because if every year it will be negative, then it will not be good for the sustainability of the company as well. Right, any question, Munira? Am I answering your question?
Yes, madam. Thank you.
Okay, welcome. Any other question, the rest of you? Okay, so my question in the assignment, I never ask about cash flow. Yeah, I never ask about cash flow because it's very complicated. I understand. It's impossible for my students, you know, for all of you who do not have any background in finance, accounting finance before, to be able to understand this particular topic in just one semester, right? So usually for the accounting student, yeah, degree in accounting, for example, the cash flow statement is a topic which will be taught at year 3, year 2 or year 3. So because to be able to understand it, they have to have a strong understanding on statement of comprehensive income, statement of the you know, financial position. Then only they would be able to really understand what is statement of cash flow, because it is actually you know, already being, all the item already being presented in the two statements earlier, the statement of comprehensive income and statement of financial position. But this statement of cash flow is actually connecting the two statements to show that actually what is happening to the cash flow of the company. So where it, because this is actually also to as a, you know, as the outcome of the accrual system being used in accounting. Accrual means the system where they report the transaction even though the transaction do not involve cash. So that is known as accrual system. So because of the accrual system, that's why the statement of cash flow, the statement of cash flow need to be reported to show what happened to the movement of cash in the company. Okay. And then it is actually a crucial statement where usually investor will look as well. Yeah. So as I mentioned, the negative final result of all the three segment, yeah, operation, investing, and financing. If it is negative, and then if the negative prolong, like for a few years, definitely it will be a bit risky for the company. Okay, because it will show that they don't have actually cash to pay off their creditors, for example. They don't have cash to pay off their investor, for example. So it is not a good indicator. Yeah. But of course the information need to be, you know, need to be looked from the bird's eye view, not only one particular information that will, you know, we cannot come up with a conclusion by looking at only one particular information, right? So we have to look at the statement of comprehensive income, statement of financial position to understand the scenario. Okay, next week we will learn about how to analyze financial statement, and then we will learn about ratio, and then from that particular topic we will know how to understand the performance of the company. However, for that particular ratio topic, it won't touch on the cash flow statement. It won't touch about this cash flow statement. The reason is because of all the items is already being reported in the first two statements, right? The statement of comprehensive income and statement of financial position. So it is all being reported already. It is just, you know, as an adjustment to show you what is actually happened to the cash, how the transaction actually involve cash. So that's why in the financial ratio analysis that we will learn next week, it will be just about, you know, how to analyze a statement of financial position and how to analyze statement of comprehensive income, and how these two statements will show you the actual performance of the company. Okay, so that will be discussed next week. All right. Okay, so any question before before we end the session, because I believe it will be, you know, too much if I continue until 5. It will be very tiring, especially because of too overwhelmed with information. You know, cash flow statement is one of the most difficult statement to be understood actually. Okay, so let us just go through this one. Notes to the financial statement. As I mentioned to you, this is actually to explain further on the financial statement. So you already look at all the financial statement. It has a notes like this. 5. Notes 5 to tell you about the, you know, the lease contract. Yeah, modification of lease contract. Yeah, so this is about lease contract. So let us look at note 5. So this is number 2. And then, okay, number 2 is about significant accounting policy. So that's why it's very long. All right, so let us, okay, this is number 5, yeah? Notes number 5. This is number 4. Notes number 5 start from here, lease. So this is about assets which is on lease. All the lease assets. So you can look at here the details about the lease asset. You know, in terms of, you know, what are the lease asset, the leasehold land, building, and equipment, tools and equipment. All these are on lease. And then it told us as well what is the amount of all these items in the beginning of the period and then at the end of the period after deducting the depreciation. Yeah, depreciation is the, you know, in terms of the value being utilized. For example, building. If let us look at the building, is easier to be understood, right? So okay, in the beginning, the amount, the value of the building that owned by the company is 287 million. It is the factory, it is the office building, so the value is 287 million, right? And then so addition 35 million. What does it mean, addition? Meaning that they buy new building or new plant. Yeah, this is what being meant by addition. So they buy more, another building or maybe 2 more building, which the value is 35 million. All right, expiration of lease contract. So these are the lease contract that is expired. Yeah, the lease contract which is expired. Okay. All right, so I used the wrong term. This is not actually being bought by them. Yeah, this is addition, and not doesn't mean that asset being bought, because all these assets are actually lease asset. So when mean that they rent the building from somebody else. It's not actually about they bought the building. It's actually they lease the building. So this is the value of the lease asset in the beginning, and then after that they add further to the amount of lease asset. For example, they have another plant which they rent from the another parties. Okay, so and then when it is expiration of lease contract, which means these are the amount value of asset or building, which is, you know, the terms of lease already expiring. And then this is modification of lease contract, which means they modify the lease contract. So this is like, you know, after modification, then the amount reduced by 18,029. Okay, so this is actually reporting to the user of financial statement what happened to the building that they lease from another party. So lease means they rent from another party. Okay, so this is about depreciation of that particular building. So they have to report it here as well. Okay, so and then this is in the year 2019. Just now 2020, this is about 2019. Okay, and then further about lease. So this is more details about lease asset. Okay, and then this is about intangible asset, number 6. Yeah, so of course you will see number 6 in the statement of financial position. So this is reporting further what are the intangible asset. So for example, it is about the goodwill related to the group ice cream business unit. So of course, Nestle sells ice cream, right? So the group business unit relating to ice cream. So the goodwill is reported in this particular financial statement as well. Okay. Okay, so that's about notes to the account. So meaning that if you want to know more about any item in the financial statement, you have to look at the notes to the financial statement. All right, so this is the list of subsidiary of the company. So which they have only 3 subsidiary, and then they have one associate company. Right, the name of the associate company is Nihon Canpack, which it is a manufacturing and sales of canned beverages. For the subsidiary, the activity is Nestle product, the activity is marketing and sales. This one, manufacturing, it is the one doing manufacturing. So meaning that for Nestle, they have 2 subsidiary. One is the one doing manufacturing, another one is doing marketing. And then this one, it is doing the manufacturing and sale of chocolate confectionery products. So all the chocolates is under Nestle ASEAN Sdn Bhd. Okay, so those about subsidiary. And then of course, there's a lot more notes here. There's a lot more notes, for example, about deferred assets, note 9. What are the details about deferred asset? What are the details about inventory? So if you look at Nestle inventory, it is divided into a few categories, which is one is the raw and packaging material. So meaning that all the can, all the boxes, all the bottles, or for the milk, for example, or the paper packaging. So this is the inventory for the packaging material itself. Yeah. And work in progress, for example, work in progress is the food product when it is in the process of finishing the product. So it is known as work in progress. For example, is the noodle. The noodle is still not being packaged yet, not being packed yet. So it is considered work in progress. Or maybe the sauce, the tomato sauce, it is still in the process of fermentation. So it will be reported as work in progress. Finished goods are the one that is ready for sale. For example, the Milo is already in the can, and then Nescafe already in the bottle. It is already finished good, already ready for sale, but not being sold yet. Not being sold yet. That's why it is reported as finished good. Finished good is the item already completed, the process of manufacturing completed, about to be sold only. Spare parts or anything related to the machinery or the motor vehicle, or the spare parts of the items. So these are all the inventory. So initially the inventory amount is 551. Now in the year 2020, at the end, it will be higher, 597. All right, and then this is about trade receivable. Trade receivable, again, it is about the customer who buy on debts, right? Okay, so actually this is I'm using the actual accounts, actual financial statement to show you about the topic that we should discuss today. Yeah, so actually it is the same thing being presented here. It is the same thing. Yeah. So if you want to see, I just go through very fast. Okay, so this is the objective of learning, and then this is the detail of cash flow statement, the importance of it. Yeah, so actually cash flow statement is a new statement being published to the user. Before this, the one that being showed and being compiled by the company for the user are only statement of comprehensive income, which is known as profit and loss, and also statement of financial position, which is known as balance sheet. So previously only those two statements being used to report the financial position of company. So in the year 1987, only statement of cash flow standard was issued This is to make it compulsory for all the company to, you know, to show to the user on how much money that they have in the company, right? The cash flow at the end of the period will show how much money is available in the bank account of the company, right? Okay, so as I mentioned, actually cash flow is cash flow statement is required to be prepared as a result of the accrual basis accounting. Yeah, so if we use cash basis, definitely we don't need to have a cash flow statement, because of we are using accrual basis where all the transaction have, you know, not only cash, sometimes it is based on credit. That's why we need to prepare the cash flow statement. Okay, this is about the relationship between cash flow and net worth statement. I already informed to you that the cash flow statement is actually explaining about the cash available in the statement of financial position. So we want to see what happened to the cash actually, what actually, you know, what actually result in the amount of cash becoming like that, right? And then of course the first figure will be coming from statement of comprehensive income, which is the profit before tax. So it is actually connecting the cash flow statement, connecting the two statements, which is the statement of financial position and also the statement of comprehensive income or the income statement. Okay, so it is connecting the two statements. Okay. All right, so this is again about the, okay, this is about the three segment of cash flow statement that we saw in the report of, in the cash flow statement of Nestle. We saw the cash flow from operating activities, and then we add or we plus or we minus the cash flow from investing activities, and then we plus or minus cash flow from financing activities, and finally what we get is net increase or decrease in cash flow. So as per Nestle, we see that it is a decrease in cash flow. All right, so this is explaining further on what meant by operating cash flow from operating activity, cash flow from investing activity. So I really explained to you while I go through the statement of financial statement of cash flow for Nestle. Yeah, and then this is what cash flow from financing activities. So this is actually explaining how from the operating activity, yeah, and financing activity will actually result in the cash and cash equivalent in the company, and then after that, from that particular amount accumulated in the company, then the company will use to invest. So this will be reported at the segment whereby it is reporting about the cash flow from investing activities. Okay, so this is further to explain about you know, all the cash flow and statement, cash flow statement. Right, this is an example, but I believe it's better for you to understand what I presented via looking at the actual account of Nestle just now, right? Okay, any question before we end the session? Any question? Okay, if yes.
This is a bit out of topic, but
Okay.
As far as I know, corporate they are required to do some social responsibility, which macam giving out charity donations. Is it recorded in the financial statements?
Yes, good question, Munira. Yeah, definitely it will be recorded. It will be recorded. Yeah, for example, yeah, let me show again the statement of Nestle. Yeah, so if you want to see the corporate social responsibility, right? Let me go to the yeah, I search here social, the word social. All right. So let me look at whether there is actually information about the social responsibility. So they will definitely have one segment, and then of course that segment actually explaining about their activities as well. Okay, hold on. CSR. Let me find the word charity if there is any. Okay, maybe donation. Oops, no information. All right. So okay, I will try to find it. Yeah, Munira, because actually they have not in this particular, but okay, it is not in this particular segment because as I mentioned, this is about corporate governance and financial reporting, but the amount will be even though the details of the corporate social responsibility is reported in other particular statement. Okay, let me show you the annual report of Nestle itself. Yeah, you have to keep to, okay, let me guide you on how to search for the information. Hold on. I want to share with you the website. Yeah. So you see the internet, the Google, right? So you
Yes.
type Nestle here. Okay, this is the Malaysia, the page. Okay, so now how to look for the financial statement. This usually all the listed companies. Yeah, listed companies means the company listed on the stock exchange. Yeah, listed company. So because of when they are listed, they are a public owned company, meaning that significant portion of their shares are held by public. They are not private company, they are public company because their shares, significant portion of it is owned by public. So that's why they have this responsibility to report to the investors. So usually they will have this particular segment. Yeah. All right, so this is about them. This is okay, their stories, their brands, their impact areas, their halal promise. So you can, if you want to know about their halal activity, you can go here. It's very good because I attended one session on halal, yeah, the halal department. I was so impressed. Yeah, so they are very serious about their halal activity. And then the department is a big department, and then it is comprised of all the Muslim who actually graduated in the food technologies. So that's why they are able to really study the halal components of the food item. And then I'm being made to understand that the halal department in Malaysia is also being referred by other Nestle companies in other countries because of they respect the halal, the halal department in Malaysia. So when other countries, for example, want to have a product for Muslim, they will refer to halal department in Malaysia to get the guidance on how to produce halal products. Okay, so for the user of financial statement, usually this is the tab for the investor. So usually listed company, they will have this particular tab especially for investors. So investor mean the public who invest in the company. So you just click here. So this is all the information for investor. It is the message by the management, the chairman and management. This is the financial highlight, right? And then okay, all these are the financial highlight, annual report. Okay, let us this is 2020. Let us go through the 2020. Let us see the CSR financial statement. All right, interim analyst briefing. Okay. Okay, let me look at the annual report, the total annual report. Yeah. So this is the annual report. Okay, let me find if there is any the segment for the corporate social responsibility. Okay, this is the one that I showed you, the corporate governance and financial report. This is the Nestle in Society report. I think this one that will have the segment of corporate social responsibility. So let me download first. Okay, can you see this report, Nestle in Society report? So it will have the corporate social responsibility. Yeah. Yeah, in the for the society, creating shared value. So all these things are the information on their activities. Yeah, this is like a story where you can read the details. Yeah, but of course the figure will be reflected in the financial report that we saw earlier as well. But maybe the item being used is not reported as charity, reported as donation, but it is actually part of the administrative expenditure. Yeah, so I will check on that. Yeah, but this is actually the report actually telling us about all the corporate social responsibility. Hold on. Yeah, this is about the stakeholder engagement, how they engage with the stakeholder, the customer, the society living in their areas. And of course, during COVID-19, Nestle is one of the companies that really are doing a lot of things to help the people. For example, they give free food for those who commute via the train, the electronic train system in Malaysia. Whoever commute via ETS, they will give free food as well, one pack food. So Nestle did a lot of social corporate responsibility actually. Corporate social responsibility, CSR. Yeah, so let me find whether you see here they have the information on the consumption of sugar and sodium, because they know that people are so worried about the use of sugar and sodium in their product. So they have this particular report to tell us, the user, about the component, the nutrient components of their products. That's why Nestle becoming a very good company in Malaysia. That's why the price is very high, because people really believe in Nestle. Okay, all right. This is about healthy cooking, eating. Right. They also, responsible marketing for breast milk substitute, meaning that they don't simply promote the product as something to replace breast milk. So they are doing responsible marketing. So they still, meaning that they still will tell people that actually breast milk is the best for children, but the substitute that they produce is something that of course if needed, if needed, and have of course its value as well. Okay, so far, right, the number of page is 160. So that definitely is quite difficult to search for it. Yeah, I have to download first, and then from the PDF, then I can do the search to get to get to the report on CSR.
Yeah, it's okay, madam.
Yes,
We
so you can maybe we can discuss next week to see. I will try to search for it, and then I will share in the class next week, inshallah. Okay, so maybe it's good to take a break now to call it a day. Yeah, it's already Asar. So let us end the session with Tasbih Kifarah and Surah Al-As. Okay, any more question before we end the session? Please do the assignment and submit the assignment, yeah? Anything you can just text me, or so you can ask me if you have difficulties in doing the assignment. All right. Okay, so let us end the session. Thank you very much. Assalamualaikum.